In today's video, I'm going to give you answers to the top 10 most frequently asked questions about the SBA 7A loan program. Stay tuned to the end because those are the two most powerful ones. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you scale your business and build wealth. If you are a small business owner looking to increase your wealth and scale your business by purchasing one of your competitors or another business, or if you're a professional looking to get out of the rat race and buy your own profitable business, then you're in the right place. And I'm going to ask you to subscribe to my channel. Don't forget to hit the bell and you'll be notified every time a new video comes out. Question number 1, will the SBA approve my loan as a startup? I get this question a lot. And the answer is yes. There's two ways that you can actually have your startup approved. If it is a franchise, and I'll go into detail a little bit later, or if it is a non-franchise in an area that is approved by the SBA with a strong management team, and first and foremost, a solid business plan that has strong forecasted financials with that to ensure the certainty from the lender that this business is going to generate the revenue enough to cover the debt that you're going to generate by starting this business. So yes, it's either going to be a franchise of the approved list, or it's going to be a non-franchise startup with a strong management team, strong business plan that is going to support the debt in the near future. And what you're going to have to remember from that is that it's got to have the SBA is going to want to know when the break-even point is going to be and when do you forecast profits, which is going to be detailed in year 1, year 2 of your forecasted revenue and your forecasted financials. Number 2, could I get an SBA loan approved even if it had losses in the current year or in the prior year? So yes, you could, but no different than a startup. You're going to have to the lender is going to have to really rely on your projections for the future. How are you going to get yourself out of the losses and into profitability? And also, you're going to have to explain why the losses happened. Was it something beyond your control? Was it market driven? Was it industry driven? Like this whole thing that happened with the pandemic was beyond your control, but a lot of people adopted and overcome. The SBA wants to know whether you have adopted and you're going to overcome and you're going to get back into profitability. It's all and will always be about profitability enough to repay the debt. So you're going to have to really give some strong forecast financials as to why, how is it going to trend over the next 24 months, which, anything beyond 2 years is just basically useless. When it comes to projections, the first 2 years are critical. And you're going to have to think through this. It's how are you in this whole process, having had losses, how are you going to reduce the risk of the lender? And it's all about you reducing the risk for the lender. Now, if you had losses, will they want to collateralize a home if you have equity in your home, or if you have strong assets on the business, will they soothe their anxiety by having some of that secure? Because the SBA doesn't really want to collateralize anything, but the lender may feel better if you had losses to collateralize some stuff. So if you have some assets that are free and clear for the business that may be pledged, and if you had losses, that may actually be a good thing to pledge. So yes, the SBA can finance a business that is losing so long as you have a clear path to profitability and beyond. Number 3, what franchises does the SBA finance? I got good news for you. Over 300 of them are in the approved list, and I'm going to put the link to the SBA where it actually details from their SBA franchise directory by letters of the alphabet from A through Z. And obviously you're going to see some of the names you know. If you're driving Main Street, you're going to see your McDonald's, you're going to see your Taco Bells, you're going to see your Subways, etc. A lot of the fast food franchises are SBA lendable. And there's a list of hundreds more. And the thing is, the SBA will study franchises as people wanting to get a franchise financed by the SBA, and they want to see the profitability and the track record of the franchisor. So for you to know that the SBA will finance, first you have to find the franchisor in the list, and there's a pretty good chance that the SBA already checked them out and they're already gonna have information like the average revenue per franchise, average net profit, and they're gonna have a pretty good idea about the debt service coverage ratio, and it's gonna be adequate to cover. So if you're in that list of approved franchises, you're halfway there. Okay, number 4. What types of businesses are not eligible for an SBA loan? I'm gonna give you a brief list. The list is actually more exhaustive in the SBA website, but if you're looking for this comes up a lot. A lot of people asking me, hey, can I buy a 50-unit building? I wanna have, passive income. And that right there, passive income, it's basically exclusionary in the SBA. They're not gonna give you a loan for a passive real estate investment. If the number one way for your business is rents, that's not going to happen. So real estate investments are a no for an SBA, either a 504 or a 7A. The only type of real estate will be approved is if you're owner occupied and you occupy 51% or more of the leasable space. Also, companies that are in lending. So if I am a commercial lender, so if that is the case, a broker, that I will not be able to get an SBA loan, and that's okay. But that's one of the things. If you're in any lending activity, is a no. Any gambling, loan packaging is a no. Important. So if you're a nonprofit or a religious organization, it's definitely a no. One of the biggest criterias, or one of the top criterias from the SBA when it comes to lending, is that you have to be for profit. So so long as you are for profit and you fall under the definition of what they call a small business, then you probably are going to be an eligible business. Okay, so there are more, and you can, or also government-owned corporations or municipalities are not eligible for SBA type 7A loans. Okay, number 5. What can SBA loan proceeds be used for? In other words, what can I use the loan for? The good thing about it is, if you remember from videos that I've done before, is that 7A is kind of like the Swiss Army knife of loans. You can use it for a lot of purposes, and here are some of them. You can use an SBA loan for equipment financing. More and more, if you have 2 partners and you want to buy one of your partners out, you can actually do a partner buyout with an SBA loan. So long as the loan will be adequately covered by the profits of the business, then you can actually buy your partner out, whether it's a minority partner or a majority partner. You can actually buy that partner out with an SBA loan. That's really, really good. You can actually buy a business. So if you own a business, if you own a business in an industry and want to buy it in the same industry, you can actually buy it with an SBA loan. And it may even be up to 100% financed, depending on the strength. If your business is strong financially and you have plenty of cash in the bank, you may need to pledge none of it to buy one of your competitors out because of the strength of you and the strength of the potential purchase. The combined earnings, or EBITDA, may be more than sufficient for you to not need a down payment. So think about it if you're actually looking to expand by scaling your business by buying some of your competition. Real estate purchases are a yes, so long as they're owner occupied. You can actually acquire land, improve land, and the like with an SBA loan. You can do construction for a building over land. You can do that. You can purchase inventory, supplies, and raw materials. You can actually get working capital. Very few places you can get a working capital. You can with an SBA loan. Most likely, it's going to be a 7A loan, not a 504 loan, and it's going to be, SBA is a variable rate loan. You can actually, this is big, and pay attention to this. You can actually refinance existing debt on your balance sheet with an SBA loan. Say you have a high interest rate, and you have, from a second tier lender, probably at rate at 12% or 14%, and you have merchant cash advances, which are very expensive, 40 to 45% APR, depending what state you're in. They're very popular in California. And if you have a loan from friends and family, and you have all these loans, and you are actually being buried by the debt load, you can actually refinance the whole thing into a nice 10 to 15 year term and be able to lower your debt and be able to have some room to grow the business. So refinancing it's actually very popular. Hey, I need to ask you for a favor. If this video is resonating with you, please like and comment on this video. See, what it does is every time you interact with my videos, it helps the YouTube algorithm serve this content to other people just like yourself who can benefit from it. So thank you so much in advance for liking and commenting on my video. Number 6, How long is an SBA loan amortized for? Okay. If it is real estate, it's going to be about 25 years, anywhere from 20 to 25 years. If you use the 504, maybe a blended rate, because the 7A, the corresponding lender, the one that is lending you 50%, maybe 25 years. The CDC maybe 20 years, so the blended rate is 22.5. Blended term maybe 22.5. If it is non-real estate, it can go up to 15 years. More often than not, it's up to 10 years for working capital and equipment. And think about it, if you're financing equipment, usually most equipment lenders will be up to 7 years because it's really the usable life of the asset. So anything beyond 7 years, basically you're going under with the depreciation of the asset. So it's either going to be 7, 10, or 15, or 25 years. Number 7, what is the rate on an SBA loan? First and foremost, you should know that the SBA 7A loan is a variable rate loan, meaning that it gets adjusted quarterly. It goes up and down depending on prime rate. Speaking of prime rate right now, as of June 2022 is 4.75. It used to be 4, and it used to be 3 a few months ago, but as you've been following in the news, rates are going up. It's a way for the Federal Reserve to hedge, basically try to lower inflation. But right now it's 4.75 with a possible cap, with a maximum cap of 2.75. So you're looking at 7.5% interest rate. Now, it may seem high right now because it used to be 5, last year, but it's lower than most loans, commercial loans out there. So the rate adjusts quarterly, and that's how, it'll just probably for the foreseeable future, it'll adjust higher, but it'll be capping at 2.75, will never exceed 2.75 or whatever prime rate is. You cannot control the prime rate, but the cap rate is 2.75. Number 8, could I get an SBA loan even if I have bankruptcy? And I'm happy to tell you that yes, you can. There's going to be some seasoning involved. You're going to have to demonstrate that you have been able to recover, whether it was a Chapter 11 for business or a Chapter 7. If it is definitely a Chapter 7, or it doesn't matter, you're going to have to demonstrate that you have bounced back from the reason why you got into it. Now, if you had a business bankruptcy versus a personal bankruptcy, which means that the reason why you got into bankruptcy was because of a business transaction and you had no control over it, you may be able to argue that you have since rebuilt. So it's really about the story. What led you to the bankruptcy, and why have you recovered since? Because everybody's entitled to fail. You're not going to succeed. Most entrepreneurs will fail their way to success. So you will have a lot of very successful entrepreneurs that had at least one bankruptcy. So the SBA recognizes the fact that everybody needs to start over sometimes, and you have learned the lesson so you don't make those same mistakes from the past. In the future, they will give you an opportunity to rebuild again, but you probably need to have about 4 to 5 years since you basically filed for bankruptcy, and your FICO will still need to be at least 650, in some cases up to 680 and beyond, to demonstrate that you have understood, how to manage your credit, and you have been able to do that. And if you have corporate credit as well, if your corporate credit has been built faster than your personal credit, that can certainly help. If you have a Dun & Bradstreet, and then coupled with your FICO score, that may actually help you. So yes, you can get, even if you had a bankruptcy. Number 9, can I get an SBA loan to purchase investment property? I already covered this a little bit ago, but this is a question that comes out. I get about an email a week. Hey, can I buy a 20-unit building in downtown Ohio, in Columbus, Ohio, or in LA, Los Angeles, California? And the answer is no. If the primary source of income of the legal entity that you're pledging is investment, rental income, the answer is no. The SBA, you have to think about it from the point of view of the SBA. They want to jumpstart the economy. The SBA is known as basically the place to go, the place of last resort. I just had a call with someone who basically is being turned down by Chase, by Bank of America. And if you demonstrate that you have a solid business, but for A or B reason you be turned down by one of these major players, major banks, but then that is a place for the SBA. So you are going to create employment. If you're going to preserve jobs, or you're going to include jobs, and you have payroll, those are the types of businesses that the SBA will lend on. But if it is going to be a 10-unit building with a property manager, or just going to manage it yourself with no payroll, that is a dead giveaway for a no, because that would be investment income. No to investment property. Number 10, last but not least, Could you get a 504 loan and a 7A loan at the same time? Yes, yes you can. And here's how you do it. The 504 loan is fixed rate loan that you actually can get to buy the commercial building that you want to move into from going from renting to owning, and you can get up to a $5 million SBA loan so long as your business supports the debt of either and for working capital. So you can get both of them at the same time, and it's great to see when that kind of comes together. But it will rely heavily on, obviously, you're borrowing money that you're going to have to repay, whether it is up to 25 years. But you have to be able to demonstrate that you have the capacity, the business has the capacity to pay back the principal and interest payments on such big loans, for both the 504 and the 7A. And hopefully this video is able to help you. Please reach out to me with any questions you may have. For a limited time, I'm giving away 2 of my most powerful tools, my advanced growth plan template, plus my financial projections workbook. If you're creating a business plan to scale your business, you're gonna need those, and they're my gift to you. All you need to do is click on the link below, and they are yours to keep.